Thank you for joining us. We'll be discussing Wendy's market research problem, an exploratory market research technique combined with the conclusive research conducted via statistical analysis unveiling that food quality, nutrition, and economic factors are in fact a choice criteria made by consumers of fast food. At the end of the day, revenue growth determines overall success in the industry. This means that Wendy's needs to reinvigorate the brand, improve services, and potential products to drive its revenue store patronage. We've approached the market research via qualitative and conclusive techniques with key objectives. The basis of our study and analysis is according to the following theoretical framework, where according to scholars, respondents use the following selection criteria in their selection of restaurants: convenience, price, food, nutrition, type of food, food quality, and drive. Wendy's has become a multi-billion-dollar company since its humble beginnings in Dublin, Ohio in 1969 by Dave Thomas. Today it has restaurants within the domestic U.S. as well as abroad and uses a mixed business model where it owns, operates, and franchises these restaurants. The company is classified as a fast food company within the quick service restaurants or the QSR segment. The economic crisis has put a strain on consumer spending, and although the fast food sector has seen growth, we also see health and nutrition factors starting to have impact on consumption trends. The company provides not only burgers in its menu, but also offers chicken sandwiches, kids' meals, desserts, beverages, as well as value meals. Though the company is ranked among other quick service restaurants serving burgers, the company will see innovations within the fast casual and convenience store segment that can lure customers away from the company brand. Within the QSR segment, Wendy's also faces stiff competition from other companies that don't just sell hamburgers or chicken sandwiches. They'll see competition from restaurants selling snacks, sandwich, pizza, and Mexican food, such as Subway's, Pizza Hut, Taco Bell, KFC, and Starbucks, to name a few. Additionally, competition isn't limited to public companies. We see growth in companies like Chick-fil-A and Five Guys Burgers that are private and aggressively growing and nipping at Wendy's heels. Of the top 50 QSRs, the sandwich, snack, and Mexican segments have been trending positively since 2007. The market sandwich with companies such as Subway's, Arby's, Quiznos, Jimmy John's, and Potbelly threatened to take share from Wendy's. We see here that since 2007, Subway's has been outperforming Wendy's. And it's coincidental that unfortunately Wendy's sold off Arby's, who is also a second largest sandwich chain per NPD. The hamburger, chicken, and pizza segments have been slowly declining, with McDonald's being the exception. Within the top 11 QSRs, we see growth by McDonald's, Subway, Dunkin' Donuts, and Chick-fil-A. Of interest is the appearance, as I previously mentioned, of Five Guys Burgers, coincidentally where 18.2% of growth in franchise chains occurred from 2010 to 2011, with companies like Five Guys and Chick-fil-A. This presents a challenge for the company as these brands and those outside the hamburger segment continue to grow their market share, eventually deteriorating profits from the company. Leaders like Wendy's, McDonald's, and KFC will also feel pressure from smaller companies that are also slowly gaining momentum and who are able to provide better environments and even delight customers. When considering the nutritional psychographic and frequency of consumption, question 14, we see that light users have the greatest concern with fat and fast food restaurants, eating less at fast food restaurants, and are taking more efforts to learn about what is in their food. When looking at this from a working status, deviation occurs when asked about fat consumption in children. We see steady concern where individually the concern declines when one considers it for themselves. Wendy's can monopolize this vulnerability via ad campaigns, tugging at the hearts of parents on how it takes nutrition seriously, even if they don't themselves. A statistically significant relationship is also found between the respondents who stay current on health trends and their most recent consumption at Burger King, McDonald's, Wendy's, and Subway's. No statistical relationship was found with Arby's. The most consumption occurs during the first 4 weeks by 18 to 24-year-olds. Consumption is tight with the rest of the ages but follows a similar pattern. However, Burger King provides an interesting contrast, where more consumers have actually consumed it in the past 3 months compared to McDonald's and Wendy's. We also see a slight increase in the consumption by 18, 25, 30, and 40-year-olds. Unlike McDonald's, who had declined among the ages except for those 30 to 34. Wendy's had similar decline to that of McDonald's, except that 40 and 45-year-olds increased it at 3 months. Short-term earnings may come from a younger segment. However, an older segment is still consuming the product, and Wendy's needs to see that its products are also relevant to these age groups. Wendy's consumers are satisfied. We see a snapshot of this. However, we can't compare it over a long period of time to see if there's been a shift, such as an improvement or a degradation. Of note, we see that the majority of consumers are those that earn less than $75,000 per year, and that within the past 4 weeks, consumption has been made by them. We see a slight increase in consumption by those earning less than $25,000 per year after 3 months, and the rest of the income segments decline. As respondents get older, they are more cognizant of the fat in foods. We can't avoid the connection of this with the previous age charts to corroborate the relationship of nutrition and consumption. The less concerned one is, the more consumption that takes place. For Wendy's, making nutrition a no-brainer seems like a logical step to drive their revenues. Factor analysis illustrates that the greatest amount of variation is present with nutrition, lifestyle, and consumption frequency, with the significance and 2 factors explaining about 75% of the variability, where the components could be healthy choices, decisions, and consumption. Sensitivity was then conducted by adding factors, and we found that it came close to 75% when we individually added factors: adults, children, employment, and region. However, when all of these factors were added together, variability reduced. Cluster analysis resulted in 5 formed clusters in agglomerative clustering that then merged into 2 groups. Looking at the remainder of the survey, correlation between income, satisfaction, and recent consumption is found. Majority of consumers have rated Wendy's a 7+, and those consumers have household incomes of $75,000 or less. ANOVA also finds statistical significance with region and efforts by consumers to look for better fast foods, with the most variance occurring in the South. Statistical significance was also found with income and nutritious interest and efforts. This leads us to conclude that cluster analysis might be pointed to these connections relative to them being influential factors. For Wendy, some of its opportunities are also threats. We see this with health and nutrition, where Wendy's has to respond and can use this to develop new programs and campaigns. Another example is the threat of food cards. Though a small industry of $1 billion, it still erodes overall market share, but also provides Wendy's an opportunity to expand its market presence. The better burger craze provides them opportunity to either innovate or acquire companies that do this best. The challenge to providing cost-effective products will rest on Wendy's ability to control food costs as much as possible. Although an external factor, the supplier power will limit the company, but the company could also create its own network by collaborating with other QSRs to gain leverage. The company will need to provide value to consumers by overcoming the image that fast food isn't healthy. They could pave the way for it to become and be healthy. Wendy's 2008 online survey did not include factors around convenience, price, products, quality, and atmosphere of the restaurant or drive-thru in order for a comprehensive evaluation of decision criteria to be conducted. Also, the study is not casual in nature in order to infer a cause and effect. There is lack of understanding as to the level of degree of strength that nutrition plays as a choice criteria when compared to other factors such as price, quality, and convenience. Secondary market research provides sufficient evidence in support of the theoretical framework. However, we were unable to determine what products were being consumed more or less of, nor could we determine what healthy foods are in demand. Having lacked technical skills with SPSS, comprehensive analysis of the 18 to 24-year-old segment was not possible. Further explanation into the cluster seen in the cluster factor analysis may provide additional insight into other factors and their relationship with another. Focus groups should be explored to understand other motivators more deeply, as well as preferences of particular age segments. We will conclude the presentation today with the following. Wendy should undergo several ongoing simultaneous strategies. Maintain efforts around gathering competitive intelligence, not limit market share research to hamburger segment, and staying abreast of environmental factors within the larger fast food industry as well as the QSR sectors, and tracking trends that are happening. Economic conditions and the perception that Americans see fast food as unhealthy have caused a decline in consumption and created opportunities at the same time. Wendy's took a chance a few years ago by focusing their menu on value means. Though revenues declined at the time, the company also had more customers entering their restaurants. Companies are starting to respond to nutrition and health concerns in fast foods. We see this with Burger King Fries, and the financial crisis saw the rise of fast casual restaurants with the focus on fresh, healthy, and high-quality foods. These alternative options that offer fresh, healthy, and low-calorie alternatives will continue to influence consumer decisions. We discussed the onslaught of privately owned restaurants and other food segments. Of interest is the slow-growing market share of food carts, albeit small at $1 billion. This is still $1 billion that Wendy's didn't make. The consumer demographic may change, but statistical analysis from 2008 and market data from 2013 still show that the largest consumer groups are those earning less than $75,000 per year, and is also composed of those aged 18 to 29. Economic concerns aren't limited to income. Consumers making $100,000 per year or less were also the most users of coupons in 2012. We believe that as economic conditions continue to pervade and influence QSRs along with health and nutritional factors, Wendy's and other QSRs will need to evolve their products to meet these needs. With an economical and nutritional motto, the company could be seen as the healthy company.